Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this rainy Monday morning. I hope you all had a great weekend and a successful start into the new week. As always, before we jump into it, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And last but not least, all the tools that I'm using that you see in this live stream / video, so the charting software, broker, strategy I'm following, and so on, is all linked in the description down below. So if you're curious to check it out, you can find all the links there. And the one thing I always recommend, if you haven't done so, I recommend you go and check out the Elliott Wave principle, which you can read online for free if you're using or when you're using the link down below. Or alternatively, you can use the same link to also get yourself a physical copy. Now that said, where's my overlay? There it is. Yeah, should have been here earlier. Akashi, welcome. Not sure if you're still here. So apparently he showed up earlier when the notification went out on Twitch that I scheduled the stream. And yeah, so just a second, then we're actually good to go. We are, we're starting slightly in the green into the new week. The one thing we still have to do for this week is actually get ourselves or write some GameStop calls. So GameStop for this Friday, although we'll have to wait for the market to open in roughly 3 minutes or a little bit more than 3 minutes to do that, which means in the meantime, we can actually take a look at the price action. Last week's calls that I sold obviously expired worthless, which means we just pocketed the premium, which wasn't a lot. It was like $75 for the week. So obviously really not life-changing money, but it still adds up over time. And we're going to have to see if we can get a reasonable amount in premium for the 5 call options that we can write against our 500 shares this week or not. Now, looking at GameStop, as I've mentioned during the episodes last week already, I still think while we bounce here on the 61.8 retracement and theoretically assuming that we are correcting this movement right now, theoretically a bounce here would be sufficient. I still think that we may get to see another push down potentially into this area, because if this is supposed to be wave A, B, C, then most likely our minimum target based on previous experience should be the 61.8 expansion, and it happens to be exactly on the same level as the 78.6 retracement level. So I still believe that we may get another push down into that area before we actually continue the journey upwards. Obviously, it would be nicer if we just go up, 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 but again, that's what I currently believe. So much about that. And if we now, on the other hand, so GameStop is just a waiting game. We're looking at the daily chart. And doesn't mean that it cannot go up first a little bit, for example. So even because then that would need to be 1, 2, 3, 4, and 4 would need to subdivide as A, B, C. So there's still a little bit room up before we might get another push down. And again, that's not a certainty and don't bet your house on it and so on. But it's just based on the fact that 2 of the target areas that we potentially would expect are overlapping nicely. Just makes me expect that we get the other push down eventually. So yeah, like it can also be that that actually was the entire correction and that we are right now already in the progress of developing the next wave 1, 2, 3, 4, 5 up. But as said, personally, I expect that we first go down a little bit. And that's that about GameStop. Market opens in 50 seconds, so we can look at something else real quick. Let's look at NVIDIA. So there last week I was wrong, as it turns out, because I assumed that we have wave A, wave B, and wave C. I think last week in Thursday's episode, I had the huge, so I thought this is wave 1, wave 2, wave 3, and now wave 4, and we get wave 5 down. When it turns out, zoom out a little bit, that it's more likely A, B, C. Oh, that actually, did I? No, yeah, A, B, C. So where we turn around at the 161.8 expansion and close to the 78.6 retracement level here, and are now in the progress of our next 5 waves up, where we potentially finished wave 1, wave 2, and are currently in wave 1, 2, 3, and then we get wave 4 and 5, and I think that third wave should terminate around 134 to 139 in NVIDIA. We can also add another extension here, so let's make that one a little smaller. So that would be basically based on this being wave 1, wave 2, and then in that third wave, we already can, with the naked eye, see the potential next wave 1, 2, 1, 2, which aims or points towards wave 3, terminating here, 125 to 128. Potentially, so it's not guaranteed, it's just the most likely or most probable level based on experience that in this area here, NVIDIA will bounce. So either that was already the top and we'll get a little bit of negative movement here before we finish the fifth wave that takes us up here. So again, you have to consider this is the big wave 1, 2, and we're currently in this wave 3. And then this third wave has to subdivide into 1, 2, 3, 4, 5 as well. So, and from the looks of it, very often we bounce at the 2618 extension level. So if we take the, nope, not now. If we take the starting point of wave 1 and the high of wave 1 as an extension, then the 2618 level or extension level is very often the point where our third wave, so 1, 2, 3, will terminate, and then we'll get wave 4, and then we'll get wave 5. And again, since the wave is nested, so once this 1, 2, 3, 4, 5 finishes, it actually completes potentially this 1, 2, 3. And then we get another wave 4 and another wave 5, and there we go. So that's what it looks like currently in NVIDIA. With that, we circle back real quick to look at the premiums that we could get. Now I didn't sell a call for on Friday because the premium wasn't reasonably high enough. It's even worse now. But yeah, we're gonna still go with what can we get here? It's like really, yeah, we're gonna just take it as it is. So, and we're gonna write our calls. So we have five $30 calls expiring on Friday. So basically written against our shares for an astonishing $27 for the week. So even worse than last week, but it's still premium that we earn. I could wait for the price to climb up, which would increase the premium that we can earn. But if the price declines, as I said, I'm expecting it, then we would just get less. And with every day and actually every hour that we move closer to this Friday deadline, the premium also gets lower because it becomes less likely to happen. I could have also considered writing a lower call, so potentially the $24 call, because that's the price we theoretically got our shares assigned. But that would mean being willing to actually give back the premium that we received for selling the $30 put that got us the shares assigned. So, and I'm not willing to do that. Yeah, moving on. So we have, 1 second. So we have GameStop and NVIDIA covered now. Friday futures, I mean, it says minus 70%. I assume they had another split. Gonna have to clear the local data, or reverse split in that case. No, yes, yeah. So there was another reverse split going on. We still would expect, now obviously all our charting is off, but right now I'd expect that this might be potentially wave A, wave B, and wave C. So yeah, obviously if we would reach that point here, then the pattern would become invalid. Right now here, that would be a potential target area. However, we have to consider if that is A, B, C, then this would need to be 1, 2, 3, 4, 5. So still consider it then possible. Let's add a retracement. Yeah, there we also have a nice overlap actually between the 78.6 retracement and the 61.8 expansion for a potential wave A, B, C. But again, it's also possible that we're still in an overall downward trend, and yeah, we'll just have to see how that goes. But we also hold a very, very small position, so it really doesn't matter. It's like less than $100. So yeah, we'll see how it plays out. And yeah, green wave still. Yeah, same situation. We're waiting for a pattern to develop. Unfortunately, that level here, where there was already relatively high short interest and the price was relatively stable, didn't hold up, and we moved a little bit lower. I'm going to see how that works out in the long run, and the same applies to SunPower, where we eventually would need some positive news. As we can see, the stock has been in a free fall. Yeah, thankfully the investment there is also not substantially huge, but it's still a little bit annoying, to be honest. We would need to eventually get to see some positive news, which could in that case shoot the stock up substantially, but obviously for that first something positive would have to happen. Moving on to SPY, similar like Nvidia, last week was on Thursday was the aha moment that likely I misinterpreted things and thought this might be 1, 2, 3, 4, and then wave 5. When it turns out, I mean, now we have the confirmation. We went higher than what do we have here? 554.87, 554.87, 555. So that would be in quotes the time to go long. The expected turnaround point here for a third wave would be, as we can see, around 572. So there's still a couple percent of growth up here potentially before we get a wave 4 and then a wave 5. Unfortunately, all my funds are locked up, so I'm not gonna play that in any way. But yeah, so just to point it out, and the same is probably true in the Nasdaq. Do we get some charts here? Let's see. Don't forget to hydrate, guys, and potentially girls. Yes, the same is true in the Nasdaq, although it appears to move a little slower. But yeah, like we see that potentially we have here the next wave 1, wave 2, and are currently in wave 3. That should take us to 20,374 to 20,700. And then we get our wave 4 and our wave 5, and then we have a new all-time high and get the next correction that may or may not be a bigger one. But so far, right now, everything is still bullish here. Now, where do we have Grab? What did Grab do? Grab finished a corrective pattern according to the auto labeling and should now be going up. We have a Leaps call option here that expires in 26. So I'm bullish on it long term. Let's see how that plays out. Question is, did we finish the entire corrective pattern that went down here? And are we indeed in a 1-2 or 1-2, like no auto labeling things? What auto labeling things? Here's wave 1 and here's wave 2. No, here's wave 2, yeah. Either way, like, are we in a 1, 2, 3 impulsive pattern upwards and will actually go up from here, or will the stock eventually break through to the bottom? Again, we only hold a small call option here long term, so not really huge risk, also not too huge reward. Now, NVAX, on the other hand, let's look at that one. We're still waiting for the breakout from here. We actually got a call option around here. Speculating that, what's our expiration date here? Also January, if I recall it correctly. Yeah, January. We see it slightly in plus. It was obviously a relatively cheap option for $94. So we have 30% in profit based on the premium that we paid, which is obviously not a fortune, but still, I expect the target area is here in the area of $30 to $62 per share, which is obviously a huge increase, which would give us a 10-to-1 payout on that option if we fall into that area, potentially even a better payout. And the good thing is we have till January for it to happen. If I'm right, however, and that is indeed already wave 4 completed as A, B, C, then we should not have to wait that long, because we see that our first wave took 1 month, our second wave took almost 2 months, our third wave took roughly 2 months, our fourth wave took also around 2 to 3 months. So we should actually expect around 2 to 3 months as well so from counting from here, from the beginning of August, so September, October, November, that should be when, if I'm right, that should be when we are up here. So that would be at least like 150% return, or almost 150% return in the next 1.5 months, or no, like 3 months, sorry, 2.5 months left or so. Or I'm wrong and we go down. But either way, an important level will be breaking this deceleration trend line here. That would potentially confirm that we are out of the woods and finish the corrective pattern that we have down here. Other than that, if we don't break that line and we bounce, then we might get another push downwards to the 61.8 level at $8, or worst case here to the $5.80. Or I'm completely wrong and something completely different happens, which is also possible. Which gives us the chance actually to, for a change, ask our magic 8 ball, will NVAX reach $30 by December? Cannot predict now. Okay, let's try again. Will NVAX reach $30 by December? Yes, definitely. Yeah, so the 8 ball agrees. I cannot show it because if I hold it into the camera, obviously the thing that's inside the ball flips, but it says yes, definitely. Just have to trust me on that. Yeah, so we had NVIDIA, we had NVEX, we had the NASDAQ, we had SPY, we had COS, worth checking out. I mean, we still hold shares there, yeah. So still have some shares. One also has to consider, well, a lot of my positions are currently in the red. Actually, our portfolio overall is still in the green. I'm now trading in that portfolio on Interactive Brokers since the middle of May. And we actually started out with 10,500 euro roughly. We're now at 11,600 plus another 100 shares of GameStop, so which adds another $2,200 that we transferred, or that I transferred already away to the transfer agent. So while we gave back a lot of the profits that we made last month because we had I had some bad picks in quotes, as we can see here, SunPower, Green Wave, and so on. Overall, we are still nicely in the green, and we're actually just waiting for, in quotes, GameStop to pick up a little bit again. To have the shares here called away. I hold shares, as said, at the transfer agent anyway, so that's not an issue. But to free up the capital and be able to actually jump into all the potential opportunities that we're seeing on the charts. Now, COS might have bounced here on the 61.8. Auto labeling would suggest that we still are getting a push further down. Looking at this, 1, 2, 3, 4, 5. Possible that we finished here already. Also possible that this is 1, 2, 3, 4, and we get another push 5 down. So we might not be fully out of the woods yet, but it seems like we are at least, so either we are out of the woods and we'll get the next wave push up here, or we just have to suffer a little bit more in decline, which is roughly a 30% decline, to be honest. So it's not like just a little bit, but suffer a little bit more in decline to potentially get down into this area here on $5 before we go further up. Again, that's all assuming that I'm right, which I don't always am. So then No, how is No doing? We got out of that stock because it looks like the pattern is going to invalidate soon, and took a very small loss here. So far, it hasn't invalidated yet, so we got out roughly here-ish somewhere with a small $40 loss or so. Yes, could have waited for a potential recovery and even close to the profit if we would have waited a little bit, but it could have also gone the other way. So, and the loss was not substantial, so it's not really that bad. For Olga, our regular like interactor and viewer here, I hope that I'm wrong and that we actually go up from here. But again, in my experience, if we get that close to the 0% line in quotes, then like really literally every time that happened so far in the past, it did not turn around, but it actually then pushed through eventually. So which would invalidate that small pattern, but still keep the big pattern alive, which only gets invalidated at the 10-cent mark. Yeah. So yeah, we'll keep an eye on that. Now, immersion still moving a little bit sideways with a small with a slight upwards tendency here. So as we pointed out, it's possible that we finished our fourth wave here, bouncing multiple times directly on the so-called base channel. And technically we'll have to wait for a breakout from this. Yeah, I mean, best case I can draw it would be like this. So from this trend line, correct, it would probably be like this. So only once we have the breakout from here do we have a confirmation based on Kennedy channeling technique that we're in the fifth wave. But again, I think right now is not a bad area to enter. Yes, it could still fall lower, but we pretty much bounce on the 50% retracement level. It happens to be the top of the base channel, which very often the wave 4 will bounce on the top or the median of the base channel. Sometimes it will be the bottom, sometimes it will also be lower. But again, very often that will be where it bounces, which happens here. So I think the assumption that we may potentially go up from here is not too bad. And if this is indeed wave 4, our fifth wave should at least recover 61.8% of the wave 4 correction, but usually it would make a new all-time high and touch the so-called destination channel either in the middle or the top of it. So there would be there's still relatively a decent amount of upside. Yeah. Although one has to say the upside here from 11 to maybe, let's say 20, depending on how long it drags out, is by far not as big as the upside in Novavax. Yeah. So where we are talking about going from around 13 or originally from around 10 to 30 or 60. Yeah. So that's immersion. We don't care much about Robinhood. What have they been up to? That's one nice example. So where we have, so short notice, first glance, I think Robinhood is going to correct further down here. But that said, last time we looked at it, it's already a while back. We actually had the assumption that if that is wave 1, 2, 3, 4, and we are in wave 5, then that would be the minimum target for the fifth wave. And we actually touch it here spot on, the minimum target, and then turn down. However, we also considered that maybe, yeah, but that then has to be 1, 2, 3, 4, 5. Yeah. So yeah, I wasn't sure if the third wave is already finished. So it was not a definitive we will bounce here. But we even had an alert here that probably didn't trigger 25. Oh, we missed it by 8 cents. Okay, so we had the alert here that might be the minimum target. My funds were anyway tied up, but that would have been an opportunity to keep an eye out for potentially, buying puts, shorting it, whatever. Yeah, remains to be seen. So I'm not going to zoom out to analyze the bigger picture, but it's nice to see that one of our, I can actually remove that alert now. One of our target areas, again, guts in quotes, hit spot on. Again, we missed it by 8 cents and provided the turnaround point. So yeah, can leave that here. Green wave we had and so on. Faraday had the reverse split. So yeah, no good news there so far. How is CrowdStrike doing? Still in a potential wave 4 or wave B. So either this is wave A, now we get A, B, C for some recovery, and then we get wave C down. So we'll still, we're not invested, so we can wait and see how it plays out, but I think there is more room down to come. And yeah, do we have anything else? Barnes & Noble Educational, still moving sideways, still waiting for it to, not sideways, slightly upwards. Still waiting for a decisive movement to point out either this is wave 1, 2, and we get wave 3, or down to point out there is no pattern whatsoever to follow. And that's it, or not. Like, there are no like audience requests. I think we've covered everything that's relevant to us right now. Beauty is moving a lot today after moving a lot in the other direction. So that's actually an interesting pattern, because this can either be wave 1, 2, and now wave 3 or wave 3 in progress, or this can be A, B, C, and then we get our push down. In both cases, if this is wave A, B, and wave C, then wave C target areas are the same as if we have a wave 3, 4, and a target area for wave 5. And we see we hit the minimum target area, but don't fully make it to the maximum target area. On the other hand, we have quite a substantial correction. So I think there we're actually going down from here. We don't have more data here, do we? Let's look at the weekly chart. There's not enough data, yeah. So it could be, yeah. I'm having a hard time seeing 5 waves here. So looking at this, I'd actually expect this to be a 3-wave corrective pattern, which means it's followed by a 5-wave impulsive pattern, in that case downwards. We're not invested, so it doesn't matter that much. And the stock is so cheap that, yeah, I don't remember where we traded it. I think I bought like 20,000 shares with like $40 or so at some point. But then I actually closed them by mistake when I was playing around with setting up stop loss limits for in Interactive Broker, but it's already a while back, yeah. But yeah, from the looks of it, it goes down further. So yeah, not bad that I closed it by mistake. And yeah, that's pretty much it. So I guess we'll call it a day here. Yeah, let's switch here. Don't forget, guys, if you haven't done so, I really recommend that you check out the Elliott Wave Principle. Again, you can just use the link in the video description down below to read it online for free. So you don't have to pay any money for the book. You can just read each chapter online for free, and you can then try to apply it to your own charts and analysis, and hopefully, or maybe be as surprised as I was when I originally discovered the Elliott Wave Principle, how in quotes accurate it can not always, but often be to give you an edge in the markets. Now that said, don't forget, if you like what you saw today, like, subscribe, enable notifications, the usual shebang. And yeah, that's it. See you then all tomorrow with another episode of Daily Market Mastery. Thanks for tuning in. Have a great day and a successful trading week. Till then, bye-bye.